All right, so you sent this white paper all about the India VIX.
Yeah.
And, you really want to get a better grip on this whole fear gauge concept.
Right.
We're going to unpack it together. Let's see if it actually lives up to all the hype.
Yeah. It definitely can be a powerful tool. But like with any tool, it's all about using it the right way.
Right. Okay, that's a good point. So first things first, for anyone who's maybe not super familiar with this,
Right.
what exactly is the India VIX?
Well, it's essentially India's version of the VIX, the volatility index that you see all the time in the U.S. markets. It's basically designed to measure, expected market volatility, specifically for the Into 5Y50 index, which you can kind of think of like India's S&P 500.
Okay. So it's not about where prices are at this very moment. It's more about where investors think they might go over, say, the next 30 days.
That's exactly it. It's a forward-looking indicator based on this idea that if investors expect some really big price swings, the options market's going to reflect that.
Okay. So a high India VIX means the market is expecting, a lot of turbulence. But isn't that kind of subjective? How do we actually measure this expectation?
Yeah. Well, the white paper goes into the really nitty-gritty of the calculation.
Yeah.
And it's based on some pretty complex math, I have to say. But the main takeaway is that it uses this order book data from Nifty options, which is basically like a real-time snapshot of what buyers and sellers are willing to pay for those options.
Gotcha. So it's not just some, theoretical number floating around. It's anchored in, actual market activity, which is actually, that's kind of reassuring.
Oh, absolutely. And it's really this reliance on real-time market data that makes the India VIX a more, responsive and dynamic indicator than some of the more traditional measures of market sentiment.
Okay, that makes sense. Now, the white paper mentions this thing called cubic spline fitting in the calculation. That sounds kind of intimidating, if I'm being honest.
It does, doesn't it? But you can think of it this way. It's like connecting the dots and smoothing out the data. The India VIX calculation uses option prices at these specific not points. And this technique helps kind of fill in any gaps or inconsistencies in the data.
All right, I think I'm starting to get the picture here. So we've got all this data from the Nifty Y options market. We use, some fancy math to smooth it out.
Yeah.
And that gives us the India VIX number.
Exactly. And that number then tells us, how much the market expects the Nifty Y50 to fluctuate over, say, the next month.
Okay, now you mentioned earlier the contribution of individual options to the VIX. Can you maybe unpack that a little bit?
Sure. So basically, the influence of a single option on the final India VIX value really hinges on both its price and its strike price. Remember, the strike price is the price at which the option holder can actually buy or sell that underlying asset.
Right. I remember that. So how does the strike price come into play then?
So imagine this, a put option with a lower strike price, meaning it gives the holder the right to sell at a lower price, carries more weight in that VIX calculation.
Interesting. Why are those lower strike put options so influential?
Well, because they become much more appealing, when the market starts to really take a nosedive. They act like a sort of like a safety net.
Oh, okay, I see. So the more valuable that safety net seems, the more it kind of sways the overall VIX.
Right.
So we're essentially using these option prices to kind of gauge how nervous investors are about potential market drops.
Exactly. Yeah, it's really a fascinating way to kind of tap into market psychology.
And speaking of market psychology, how does the India VIX actually play out in, the real world of investing? For me, for example, how could I actually use this information?
Well, that's where things get really interesting, and that's what we'll explore next. Let's say you're looking at a stock, on the National Stock Exchange of India, the NSE. If the India VIX is high, it's signaling that the overall market is anticipating, some choppy waters ahead, you could say.
Okay, so that means the stock I'm looking at, it could have some wild price swings.
Yeah.
But is that necessarily a bad thing?
Well, it depends. It really depends on your investment style and how much risk you're comfortable with. If you're a long-term investor, those short-term fluctuations might not bother you that much, right? You're focused on the bigger picture.
Right, because over time, those ups and downs might even out. But if I'm looking to, make a quick profit, a volatile market could be a real nail biter.
Yeah, exactly. And that's where understanding the India VIX can be so valuable. It's like having this extra layer of insight when you're assessing the potential risks and rewards of an investment.
So it's not necessarily about predicting the future. It's more about understanding the current mood of the market.
Yeah, precisely. It's all about gauging that collective sentiment and using it to inform your decisions.
Okay. I'm seeing a lot of headlines lately about the India VIX, like spiking. Is that something investors should be genuinely concerned about? Or is it just, normal market fluctuation?
Well, it's important to kind of look at the context. A sudden spike in the India VIX could be a reaction to like a specific event, like a major policy change, or maybe some global economic news that's kind of spooking investors.
So it's not always a sign that, the sky is falling,
Mm-hmm.
but it's definitely a signal to, like, pay attention and do your homework.
Absolutely. And keep in mind, volatility isn't always a bad thing. For some investors, especially those with a higher risk tolerance, it can actually create opportunities.
That's true. A volatile market can lead to, bigger price swings, which could mean bigger profits if you're, playing it right.
Mm-hmm.
But that probably requires a bit more of a sophisticated strategy, right? Like
Yeah.
maybe something involving hedging.
You're exactly right. Hedging is a way to kind of manage your risk. It's like buying insurance for your investments. And the India VIX can be a really powerful tool for that, for hedging.
Okay, I'm intrigued. How would that work?
Let's say you're concerned about a potential market downturn. You could buy VIX futures, which are contracts that increase in value as the India VIX rises. So if the market does take a tumble and volatility spikes, your VIX futures position could actually help to offset some of your losses elsewhere in your portfolio.
Oh, okay. So it's like a counterbalance. If one part of my portfolio is, losing value, another part is gaining thanks to the VIX.
Exactly. Of course, it's important to remember that any investment strategy, especially those involving hedging, does carry risks.
Oh, absolutely. Always consult with a financial professional before making any big decisions. But even without getting into those complex strategies, just having this awareness of the India VIX can be so helpful.
Oh, for sure. It's a valuable tool for understanding the dynamics of the Indian market, especially in like a globalized world where everything is so interconnected.
Right. And speaking of interconnectedness, we were talking earlier about the India VIX potentially reflecting broader economic trends. What I find really fascinating here is whether it can actually offer clues about, the health of the Indian economy as a whole.
That's a great point. Remember, the India VIX is ultimately driven by investor sentiment, and that sentiment is often shaped by, what's happening in the economy.
So if investors are feeling, optimistic about the future of the Indian economy,
Yeah.
they're less likely to expect those big price swings,
Yeah.
which could lead to a lower India VIX.
Exactly. And conversely, if there are concerns about economic growth, inflation, or political stability, investors might get a bit, jittery, and that can push the VIX higher.
So it's like this feedback loop. The economy influences investor sentiment, which is reflected in the India VIX, which can then in turn influence economic decisions.
Right. And what's even more interesting is that some studies have actually suggested that the India VIX could be like a leading indicator for certain economic variables.
Wow, that's a bold claim.
Yeah.
Are there any dissenting opinions or studies that maybe contradict that? What are some of the limitations of using the VIX as a predictive tool?
Well, it's definitely not a crystal ball, and more research is always needed to kind of confirm these findings. But some studies have shown a correlation between changes in the India VIX and future, GDP growth, for example.
So by watching the VIX, we might be able to get a sneak peek into where the Indian economy is headed.
It's a possibility. Of course, you always have to consider other factors like, government policies, global economic trends, and even unforeseen events like natural disasters or political upheavals.
Right, because those kinds of events can really shake things up,
Yeah.
no matter what the VIX is saying. Okay, so we've covered a lot of ground here. We've gone from defining the India VIX to understanding how it's calculated to exploring its real world applications for investors and even touching on its potential as an economic indicator.
And through it all, we've really seen how the India VIX isn't just this abstract number. It's a reflection of those, human emotions, those hopes and fears that really drive the financial markets.
It really is kind of wild how much psychology plays into all of this.
Right.
It's not just about these charts and graphs. It's about understanding how people are actually reacting to what's happening out there in the world.
It really is. And that's what makes it so challenging, but also, so fascinating. There's always this element of unpredictability when you're dealing with human behavior.
Okay, so for our listeners out there who are okay, I'm hooked on this India VIX thing now, I want to learn more.
Yeah.
What kind of resources would you recommend?
Well, the NSE website is a great place to start. They have tons of information on the India VIX, including things like, historical data, methodology documents, even some educational videos. It's a really like one-stop shop for all things VIX.
That's awesome. And for anyone who really wants to get into the weeds, the white paper that you sent us is definitely worth a read. It's a bit dense, I'll be honest.
Yeah.
But it really does break down the calculation process in detail.
Yeah, if you really want to understand the mechanics behind the number, that's the place to go.
Perfect. Well, this has been an incredibly enlightening journey. We've learned so much about the India from its, basic definition to how it's calculated to its real-world applications and even its potential as a predictor of economic trends.
Yeah, and I think we've accomplished our mission here to kind of demystify this often misunderstood index. It's not a crystal ball, as we said, but it can be a really valuable tool for, anyone interested in the Indian market.
Couldn't have said it better myself. But before we wrap up completely, I want to leave our listeners with one final thought to kind of chew on. We talk about how the India VIX can be influenced by economic events, but what about the other way around? How might specific government policies or regulatory changes impact the India VIX?
That's a great question. Think about it this way. Any policy that impacts investor confidence or injects uncertainty into the market could potentially move the needle on the India VIX.
So, for example,
Yeah.
a sudden change in tax policy, or maybe a major shift in trade regulations, could lead to increased volatility and a spike in the VIX.
It's certainly possible. Remember, the markets really hate uncertainty, and any major policy change can create this ripple effect.
Okay, that makes sense. So it's not just about watching the markets themselves. It's about understanding the whole political and economic landscape, too. It's all connected.
It really is. The India VIX is just one piece of a much larger puzzle, but it's a fascinating piece that can offer, some really valuable insights into the world of finance and the Indian economy.
Well said. And on that thought-provoking note, we'll wrap up this deep dive into the India VIX. Huge thank you to our expert for guiding us through this complex topic.
My pleasure. Always happy to talk VIX.
And to all our listeners out there, keep those curious minds engaged, and we'll catch you on our next deep dive adventure.